The chair of investment banking for China at the Hong Kong arm of Nomura Holdings Inc., Charles Wang Songge, has been barred from leaving China in relation to a long-running investigation of a top dealmaker in the country. Wang overlapped with Kong Lin, a former executive at China Renaissance Holdings Limited, while at China's Industrial and Commercial Bank, or ICBC. Lin was summoned by regulators a year ago and has since been detained. In 2017, Lin joined China Renaissance, a local investment bank founded by Bao Fan, after leaving ICBC. He played an important role in a strategic partnership between the firms. Since early this year, Bao too has been detained. Over the past few years, President Xi Jinping has cracked down on broad swaths of the private sector. That's not all. In 2023, China expanded its anti-espionage law, broadening its scope from state secrets to encompass anything related to national security. This includes documents, data, or materials. New surveillance powers grant access to people's emails and social media, thereby impacting China's investment climate significantly.
The kind of political situation we find today is worsening what are really certain very structural challenges which the Chinese economy faces. It has for a number of years followed a strategy of investment and export-led growth. And it has not really made the transition towards a more consumption-led growth. And this has really resulted in the kind of slowdown which you see in the Chinese economy. And of course, this has been exacerbated by the fact that you have a political dispensation today which is very nervous about what it calls regime security. There is now a kind of an upsurge of, more ultra-nationalist, more xenophobic kind of a attitude. So this has had a very dampening effect on foreign investment into China.
China's economy is not at its healthiest. The one-child policy had demographic consequences. Its population is aging rapidly and could strain its social welfare systems and labor force. In 2019, China's property loans peaked at 30% of banks' portfolios. By mid-2023, it decreased to 23%, indicating potential efforts to stabilize the property market. With 70% of Chinese household wealth invested in real estate, the recent downturn in the housing market is affecting the broader economy. Existing home prices in prominent urban areas of China plunged between 15 and 25% since late 2021, according to reports. China's factory activity in September recorded its first expansion in 6 months, according to the government Statistics Bureau, but it's still far from pre-pandemic growth levels. Global investors also pulled out $10 billion from Chinese stock markets in recent months.
China's growth is interesting in the sense that its society and its economy and polity have not all proceeded in a very harmonious manner. So as a result, China's example is a country which has grown old before it has grown rich. Its one-child policy, as you mentioned, has led to a demographic lineup which is severely disadvantageous. Secondly, what it has also led is that despite a fair amount of automation, and despite the fact that China has really ramped up its skill levels, it has perhaps one of the best skill sets in the world today, it is actually facing increasing labor costs across the spectrum. And this is leading to a problem with the economy.
Economic apprehensions are compounded by the suppression move of the state on alleged corruptions that started in late 2021. The abrupt absence of a senior executive has become a signal of a state crackdown or investigation. Listed companies reportedly lose contact with certain executives and need to make their own inquiries into what happened within the country's opaque legal system. The disappearance of Bao Fan, a former Morgan Stanley and Credit Suisse banker, had hurt the sentiment of tech and investment sectors that suffered a prolonged crackdown by the authorities.
So on the demand side, because it is facing declining global demand for its products and its manufacture, It'll have to find at least A, value addition in its products that it sells overseas, and B, it'll have to definitely stimulate its domestic demand function. On the supply side, I would say that there has always been a big problem with Chinese data and the unreliability of Chinese data. So I think they will have to recognize and reconcile this data. And so they will probably have to bring in new asset management companies.
Over the years, China has relied on investment and export-driven growth rather than emphasizing consumption. This approach hit the country hard during and after the COVID-19 pandemic. In this backdrop, continued authoritarian stance and actions against multinational companies will erode business sentiment, impairing direct investment that contributes to China's growth.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She's working her way to the corner office. Business Standard.